Hey everybody, Boris from Forex. Welcome to the crosses section for April 8th, April 12th, 2019. The crosses this week are really sort of an interesting calm dollar cross section. The ideas I have for you guys pretty much revolve around two calm dollar cross pairs. Kiwi CAD to the downside, which looks kind of interesting, although it's a very, very skewed move. You really have to give yourself a massive amount of distance to be able to allow this trade to play itself out. The resistance here is 92.75, support is 89, and we're somewhere around the 90 level. But it looks like Kiwi is heading down, and I think the lower rate expectations of Kiwi could drag that whole pair further down through the 89 level. Euro Swiss looks kind of interesting as kind of a counterplay to all of the negative doomsday of euro that we've been talking about. It's an interesting hedge, I think, to the idea of sort of a short euro trade, because what you see on the euro Swiss side is actually a double bottom support around that 1150 level. Although it's tepid, I'll be the first one to admit. But if it works, that seems to be a pretty decent support level from which you could trade all the way up to the 113s. And then the other story that's sort of interesting here is, again, contrarian play. If you think the odd Kiwi is a little bit overbought, which it certainly looks like on the charts, I'll show you, then certainly this resistance at 106.50 is kind of tradable for maybe 50 to 100 points to the downside. Let's take a look at the charts here and just see how everything shapes up. And we can start actually, let's start with the odd Kiwi, because that's the most interesting, I think, pair as far as the overbought, oversold conditions. So we're coming up into a clear resist level here at this 106, 106.50 level. We're very, very stretched out off the moving average here, far, far away. RSI back up to 70. The only thing I would caution here, and this is the key thing, is I'd really like to see the RSI fail. So I'd like to see maybe a candle or even two that are red that signal that there is indeed a short-term top here, because the RSI could climb to the 70s all the way up to 75, and you're sort of selling into the highs as you go forward. I'd like to see a confirmation, perhaps even a failure at a lower high here, and then a move back down towards the moving average as a natural progression here on that trade. But just from a pure technical point of view, it does look a little bit oversold, overbought, and definitely gives you a chance here to maybe trade something. Kiwi CAD, on the other hand, this is the trade that I like. To the downside, you can see it broke the 500 SMA. Really, really strong, sharp move post the RBNZ without much of a recovery. So we are at this very key support here. Yes, there's no doubt that it's holding. But if you get any kind of strength or any kind of weakness, more importantly, on the Kiwi, I think it busts all the way down towards the 89 level at least. And overall, if you sort of look at this from a long-term point of view, this is a double top formation, very, very strong topping formation. And generally, it seems to me that on a relative rate basis, even if the Bank of Canada is not going to raise rates, the tenor of Canadian rates is going to be more favorable than the tenor of Kiwi rates because China is going to slow down. And I think the RBNZ kind of signaling they may be in a position to lower rates will create further downside action in this particular trade. It's a very slow trade. It could take months to develop. It's a very slow moving trade. So you have to give yourself kind of a very long positional move here. But I think just from let's say a quarterly point of view, if you're looking now and you're trying to project a quarter forward and maybe even a half a year forward, the Kiwi rates relative to CAD rates are going to compress. That's going to push down on this cross, and you're seeing a nice big double top formation here. Potentially, we could see 88 down the road, and that seems to be kind of a longer-term trade that we can take a look at. And finally, here's the Euro Swiss. Sorry. And it's a small, I'll be the first one to grant you, it's a small, not exactly a very enthusiastic double bottom here, but it did hold at the 1100 level. We're struggling a little bit here to the upside, but generally it feels like you're not, your risk here is relatively small here. Your risk is about what, 100, and the potential here to go to 1300, maybe 1400 on a long run is quite possible. But it's also sort of a very, very quiet, really non-eventful trade. But if you think that this double bottom or triple bottom actually holds, then it's possibly tradable here to the upside. And you see the RSI, after being grossly oversold here, came back up into the more neutral territory and could just kind of wallow around here and try to rebuild to the upside. There's still room here to move towards the 20 SMA. That's why this could be possibly a tradable move. And that's the story in the crosses land. Wish you guys all the best of luck, the best trading this week. Watch the euro. That's going to be the key trade for everything as we go into the week. Wish you guys the best of luck. Boris, over and out.